Hello, ladies and gentlemen. My name is Greg Mikulowski from ForexLive.com. I'm going to take a quick look at the dollar versus yen. It's made a move to the downside along with the dollar selling, and in the process broke below a key technical level, but only briefly. Let's take a look at that currency pair. Looking at the hourly chart from this low right here, going back to the date of October 5th, the price moved up 12 consecutive days to the upside. This was the highest close that we saw in the dollar versus yen. On trading on Friday, we saw the price move up to yet a intraday cycle high at 151.938, and then we saw the quick, sharp move to the downside. That saw the price move all the way down to the 146.24 level before rebounding back to the upside fairly sharply. In trading yesterday, we saw the Bank of Japan come in and intervene in the markets right through here, and we saw the price move sharply to the downside again, trading to a new low price that tested our low price going back to this day on October 11th, and then saw another sharp move back to the upside. So lots of volatility over Friday and Monday's trade with over 400, 500 pips moves intraday. In trading yesterday, the price did settle in between the 100-hour moving average, that's the blue line in the chart, and the 200-hour moving average, that's the green line in the chart. Also of note here on the hourly chart is that in trading today, the price also moved below the lower 200-hour moving average, the green line in the chart. Here is the break on Friday. This is the break that we saw today. And we saw the price move below the 200-hour moving average in each of these days, only to reestablish support against the 200-hour moving average after the break failed. And we saw that in trading here today. Until early in the New York session when the price fell below the 200-hour moving average. And this time, the momentum continued to the downside. We saw strong dollar selling helped by the fall in U.S. yields. And that pushed the price down below the 50% midpoint of the move up from the low price that started that 12-day run to the upside, with the 13th day peaking the price up here at 151.938. 50% comes in at 147.727. And in trading here today, the price moved below that 50% midpoint, also below the old swing high here and swing lows through here. So between the 147.66 and 147.727 fell below those levels. That should have led to further downside momentum, but we have not seen that. We've seen a rotation back to the upside and currently trading at 147.97 as I speak. So what needs to happen? Well, if the sellers are going to take more control in the dollar versus yen, we need to get and stay below the 50% retracement level. We need to get and stay below the 147.66 level. We need to get below this area through here and stay below that level to give the sellers more control and more comfort. We tried it on Friday. We tried it yesterday. The price could not sustain the momentum below that level. You can see as we broke above this on Friday, the market moved higher and into Monday as well. So we need to get below that level in order to keep the sellers more in control. If we can't do that, we're going to see a rebound back to the upside as the fundamentals of the dollar versus yen continue to keep that pair supported. That fundamentals include the U.S. Federal Reserve keeping rates higher and continuing to move rates to the upside, while the Bank of Japan keeps to their policy of yield curve control and keeping rates unchanged for an extended period of time. So that is always the bias to the upside for this currency pair. And as long as that stays in place, we have to rely on the technicals to provide the downside momentum, and getting below the 50% retracement is one of those key technicals that needs to happen in order for this pair to move to the downside. On the top side, we do have resistance, though, against the 200-hour moving average, maybe this 38.2% retracement. As long as the price can remain below that level, then there's a battle on between the 50 and 200-hour moving average. But the bias would remain more to the upside on the disappointment below the 50% retracement level. So there you have it, a look at the dollar versus yen from a technical perspective. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.